Welcome to another video in which I will be providing some more free analysis and education for all of you. If you're new to the channel, I'm a top author on the TRADINGVIEW platform as well as running an educational company and swing trading full-time. Without further ado, let's get straight in the video and provide some free value for all of you. Okay, so let's make a complete market breakdown showing you how you're supposed to do it. So how you're supposed to approach your multi-time frame analysis. So starting from the monthly time frame. Now this is Euro AUD monthly time frame, and let's start our analysis. So the first thing that you can immediately see when looking at the monthly time frame is that the market started from this high and ended at this low, creating a very nice and strong impulsive phase to the downside, which lasted many years if you zoom in the chart. And now where the market is in its cycle. The market is currently in the retracement phase. So basically we have a clear impulse and a retracement. And you know what happens in the market. You have impulses, then you have retracements, and then you have continuation to the downside. That is how the market works from an impulse and corrective perspective. So let's take our Fibonacci from the high to the low of this impulse, because as you know, if you want information on a retracement, you need to take your Fibonacci on the impulse. So let's take a very big and massive monthly Fibonacci from the high to the low. And what you can clearly see here from a monthly perspective is that the market is currently retesting the 50% level. So basically the 50% Fibonacci. Now, obviously the 50% is not a Fibonacci level, but it is a strong resistance level. Okay, the Fibonacci are obviously 382, the golden ratio, the 0.786, called also the 78.6, but simply the 50% is not strictly a Fibonacci number, but it is a very strong area in the market because it's 50% of the impulse leg to the downside, and as you can see, it's been acting as strong resistance. Okay, every time that the market went for a hit of this level, it created rejections, and now what we can expect is a nice push away from it, potentially even a strong impulse to the downside to test the 382 Fibonacci from the monthly impulse. So overall, we're expecting a push to the downside from a monthly perspective. Let's go down on the weekly and see what kind of price action we're getting from the weekly time frame. Now on the weekly, things are indeed very interesting. In fact, the market currently, this is what the market did. Make an impulse, correction, another impulse, tried to make another impulse actually, and then broke to the downside, creating this clear information. Now after the information, if you remember on TradingView, I told to all of you, expect the market to go for a retest of the neckline. And then after the market went for a retest of the neckline, I told you guys, expect this short to the downside. And that is exactly what happened. Then overall, we were expecting for the market to complete with a lower push to the downside. But at the moment, what the market decided to do is to go for a retest again of this level. So we need to react to the new price action that the market is showing you, because as you know, trading is reactive and not predictive. So at the moment, previous support to resistance rejected once and twice, and you expect continuation to the downside, because overall the pattern that you're seeing here from a weekly perspective is down, up, and then you expect the next push down. So overall, impulse, consolidation period, and then continuation to the downside, a pattern that we see over and over again. So the first target to the downside, let's determine the target to the downside. So if we want to determine the target to the downside, what we need to do is to take our Fibonacci on the previous leg, because if you want information on one leg, you need to take your Fibonacci on the previous one. So let's take our Fibonacci from the high to the low. And in this case, we will have two clear targets, the minus 27 and the minus 0.618. Let's take the minus 27 as is the first possible target to the downside. And you can clearly see that it is a target that makes a lot of sense because it is basically also this previous support area. So overall, we're expecting the market to make a push to this zone from a weekly perspective, and the monthly confirms our bearish view for this pair. Now going on the daily, things appear immediately very clear. In fact, what happened here from a daily perspective is the market went down, up, a clear W formation, and the market today made a strong push to the downside. So what we can expect at the moment is a retracement and then continuation to the downside with the creation of this head and shoulders pattern. So it's pretty simple to see that we can expect continuation to the downside on Euro AUD. Now, If we go on the 4-hour time frame, we can clearly see that at the moment the 4-hour time frame has broken structure to the downside. In fact, we had our previous resistance now turn support at this area, and the market has broken it to the downside, which is something that we really were waiting for the market to do, because we knew from higher time frames that the market was bearish. So at the moment, can we take short from this low? Obviously not. We need to wait for a retracement and for other conditions to be satisfied before we can take the short, because you cannot short a market that is overextended to the downside, especially if you are at a support area, because you can clearly see that you have support at this region. So obviously you can't take short from this region. So what we will be doing with the students on EURAUD. So definitely we will put this pair on watch list, and when the market will start the retracement, and if the market will start the retracement, then we will definitely be looking inside of this area on the 4-hour time frame, because remember that the monthly, weekly, and daily are for direction and the 4-hour is for entry. We will be monitoring inside of this area for a potential push to the downside, and if all the rules of our strategy will be satisfied inside of this region, then we will definitely be taking the short to the downside. And it will be a short with a very good risk to reward, because overall, as you can see, the push to the downside is quite massive. And a very important rule that we have with our strategies is that we don't take a trade if we don't have at least a 1 to 3 risk to reward. What does 1 to 3 risk to reward mean? Means basically that we are risking only we are risking, if we risk 1%, for example, of our account, for example, with we have a 100 pips stop loss, then we will not take the trade. For example, let's make, for example, that we have 100 pips stop loss. We will not take the trade unless we have the possibility on the move to make at least 300 pips. So basically triple of what we're actually risking. And why do we have this rule? We have this rule because if you make the math, it's pretty simple. If you win 3 trades and you lose 7, you will still be in profit, because with the 7 trades that you lose, you lost 7%. For example, if you're risking 1% per trade. But with the only 3 trades that you win, you actually made 3 times what you lost here for every trade that you win. So basically what you made was 9%. With the 3 trades, you actually made 9%. So overall, you made 2%. It's pretty simple. That is why one of our most important rules is that we do not take a trade unless we have a minimum of 1 to 3 risk to reward to the overall downside target, using a conservative stop loss that is protected by structure. And how do we take our precise entries? We do that on the 4-hour time frame using the rules of our strategies. So this is overall the multi-time frame analysis for EURAUD, and it's the same thought process each and every time. That is how you're supposed to approach your multi-time frame analysis. Let's make another breakdown. Okay, so let's speak about EURSGD, so Singapore dollar. So let's speak about this pair because this is very interesting at the moment. So what you can clearly see from a weekly perspective is that the market is currently retesting this area of clear previous support. This area was respected as support many times, and that support is now turn resistance at this area. So we have clear support, turn resistance, and we expect continuation to the downside from this area. What you can also do is by taking your Fibonacci from the high to the low of the impulse, because as you know, if you want information on this retracement, you have to take it on your impulse. You clearly see that the market went for a retest of the golden ratio already, and we can expect this weekly candle to now start the push to the downside and provide a very nice push. Now, how do we determine the targets for the move to the downside? We have to take our Fibonacci on the retracement leg, so from the high to the low of the retracement, and we will clearly get our target at the -27, the first possible target to the downside. Now, going down on the daily time frame, our hypothesis is completely supported by the daily time frame view, by the price action at the moment on the daily time frame. In fact, you can clearly see that at the moment from a daily perspective, EURSGD is retesting a strong area of resistance. In fact, it was resistance here. The market broke above, went back below, found support with this green candle, broke below, and now the market is retesting a very strong region of previous support, now to resistance, plus we have the possibility to create this head and shoulders formation and start a push to the downside, and you have a daily impulse correction and impulse strategy to the downside, which is intrinsic of every head and shoulders pattern. Now, if you take your Fibonacci from the high to the low of this impulse, you can clearly see that at the moment the market is in between the golden ratio and the 0.786, And you also realize that the 0.766 is lining up with the top of the structure. So it's very probable that the market will go and test this area. But overall, until the market remains below this area here, so until the market doesn't close from a daily closing perspective above this area, we are overall with a bearish view on EURSGD for a target overall to this low. So until the market from a daily closing perspective remains below this area, we are bearish overall on the pair. But the problem is, how do we take our entry? So at the moment, the market hasn't shown any valid entry yet, but the market can definitely show a valid entry possibly tomorrow. So what we will be doing with students is definitely we will be monitoring price action around this region for a potential short opportunity. This pair is already on watch list, but it hasn't satisfied our rule for entry yet. So if EURSGD will satisfy our rules for entry inside of this area, we will definitely be taking this short with a very good risk reward to the downside. I hope you enjoyed the video. If you did, make sure you smash the like button and comment below. It really does support the creation of more free analysis and education for all of you. And if you still haven't, make sure you go check out the mentorship program. It's a very complete program. You first get the rules of all my strategies, and then you trade them live with me. Every day I send you a new daily market breakdown showing you all the rules for entry, which pairs are actually satisfying all the rules for entry, and which pairs you're actually supposed to have on watch list, as well as answering all your questions every day directly on your student dashboard in video format. Without further ado, I will invite you to go check it out or go check out the next video.